Yep, will do. So guys, again, thanks for being here today. I'm taking out part of your morning is a huge commitment, especially for those here in the U.S. that are probably trying to gear up for parties and whatnot tonight. So thank you for taking time to invest in yourself today. I'm always super pumped to be at events like this. I love it because they're great. It's a great way to get different trading ideas for ways to trade and find a method, a new method, or maybe even a combination of methods that will suit you and your trading style. With that said, please keep in mind, there's no magic bullet. I think Dan said it. I know Troy said it. There's no magic bullet. There's no quote best way to trade. The best method is the one that gives you an edge and the one that you can execute consistently time and time again, right? Just because one person does something in a different way than the other doesn't mean that one's right and one's wrong. It just means that they've got different ways of approaching the market. And that's the cool thing about trading. We can all kind of come at it with our own personalities. Different approaches work for different people, which is, again, why it's cool to have events like this. There's so much to learn. Also, as Jeanette mentioned, just to put you at ease, let you really focus on what I'm teaching today. I want to let you know I'm delivering 100% actionable content that you can start applying immediately. Well, I mean, not immediately because it's Saturday, but Monday, you can start applying it Monday to your trading. Now, I have some tools that I use that make things easier, but everything I teach today, you can do with indicators that are available by default on your trading platform. So I'm going to show you exactly how to do that. And at the end of the session, I'll give you an opportunity to get the tools that I use and learn more from me if you'd like to. Sound good? Cool. All right. So I'm going to take the chat and just kind of push this out of the way a little bit. I will get to your questions at the end. So just keep in mind if you're typing something in chat and I don't answer it right away, don't think I'm ignoring you. Oh, but actually, I'm not even seeing chat. I don't know, Jeanette or the guys, if you could enable the chat for me, that would certainly be helpful because I just see the questions you guys are posting in. But anyway, if you are typing in chat, I'm sure they'll get that sorted. I won't jump into it at the end because honestly, I'll go off on some kind of a tangent. I love to talk about trading, but I'm also kind of easily distracted. And I'll be like, oh, let's talk about that, and shiny object will take me off track. So if we focus on the presentation, I can get through everything I want to teach you and have time to answer your questions at the end. So let's do it. What we're going to talk about today is a super simple trading method that will help you time your trades better and stack the odds in your favor when you're trading. And that's what we're looking for. That's actually what Troy was just talking about a second ago, putting the odds in your favor, getting an edge on the market. The title of my presentation, this segment, is 3 Simple Steps That Can Change Your Future. I am all about simple, as again, you've already heard from the folks ahead of me. I think you'll see that as a common theme with most people that have been in this game for a while. We find that simple strategies are easier to follow and they're effective for the long term. And there's reasons for that psychologically, and we'll get into that in here in just a little bit. What I'm going to talk to you about today is a super easy and quick way to find the directional bias for an instrument. Then we're going to give you a 3-step process for entering your trades. And then finally, I'll show you how you can get access to an amazing indicator, if I do say so myself, that helps you identify trade entry and potential exit points. All right. Now, before we get to that, I am compelled to put up a disclaimer. It's very important. I point out I'm just some guy on the internet. I'm not a licensed investment advisor. I don't play one on TV. I don't pretend to be one here. I don't hold any governmental distinctions. I'm just simply going to educate you about methods, techniques that I've been exposed to over my 12 years in trading and coaching and training in this business. And it's something I use and I love, but I encourage you to do your own due diligence before you do anything. Don't just take something and just throw caution to the wind and start using it. Dig in, do your due diligence. Bottom line on this slide is that trading involves risk. You should never trade with money you can't afford to lose. You're going to hear this over and over again. Any trades that are shown, any results that are shown, whether they're real or hypothetical, never a guarantee of future results. I mean, heck, here in Texas, we can't even predict the weather 5 minutes from now. So how are we going to predict the future about an emotional market like like we're dealing with here? So I hope that's clear enough. We're all adults. We're all responsible for our own actions, right? So let's just kick this off with a reality check. Who's feeling like this right now? Who's feeling a little bit beat up over the market? I mean, this was me. This was me when I started out. And funny, Troy shared a similar story as well. I'm not going to go into a ton of depth on it, but my foray into trading went something like this. I bought a trading system. It gave me some signals. I loaded it up. I got a signal, and I made some money. Like, holy crap, that was awesome. That was great. But I didn't learn anything. I didn't learn about how the system worked. I didn't learn about what edge it created. I didn't learn about how to size my trades, how to manage my trades, how to set stops, how to set targets, any of the stuff that's really important. Didn't learn about trading mindset, right? In my mind, all I had to do was fire up the software, find a signal, make money. Well, obviously you can guess where that went shortly after. I got a hard smack of reality right on the chin. So, kind of, it's that common theme is often what sets us straight, though. And the funny thing is, I'd had a taste of success, right? I got a little bit of success, so I knew that it was possible. I just needed to learn more and get myself on the right track. And luckily, people are happy to share. It's great. Again, events like this, folks come and share great information. And it was through events like this I found mentors, and I found people to teach me about odds and probabilities, teach me about risk management, proper trading mindset, different types of analysis. And that led me to where we are now. And who am I? Just real quickly, a little bit about me. Some of you guys may have heard me speak before, maybe seen me in different arenas, but ultimately, I'm a father and husband first and foremost. Everything I've done since I left corporate America, 15 years ago, I've designed my life around my family, and everything I do is aimed at doing things that we enjoy. And one of the big things we enjoy doing is traveling. We've lived all across the U.S. from Nevada to Florida and places in between. I mentioned I'm in Texas right now. We've lived in two countries outside of the U.S. for a few years. We lived in Costa Rica for a couple of years, which is a couple of the TradeThirsty events I spoke at. We were at our house in Costa Rica, and then I was down in Argentina for a year. We loved it down there. Traveled, all through South and Central America. We travel regularly. Well, I guess we did until the world shut down. Earlier this year, we were actually in Costa Rica when the border started closing in March, and caught one of the last flights out to get back here to home base. We've enjoyed visits through 28 countries in just the last few years. I've had the awesome opportunity to educate my son through travel and expose him to so many different cultures, and it's very eye-opening. It's great to be able to see him absorbing that. I think it makes him a better human being altogether. All of us, makes everyone a better human being. Anyway, all made possible by the benefits of being able to work from my laptop in the financial niche. So, similar to what Troy was just talking about. I mean, all you need to trade is a laptop and an internet connection. And since 2008, I've been working with traders to help them find that path to success. And that's what we're going to do today. I'm going to share with you one of the strategies that I like to use. I feel like it clears out the noise in the market, and it gives you a quantifiable approach to monitoring the market and finding great trading opportunities. I think this strategy is perfect for anyone that's looking to just find that solid footing. Because I know how it is. You're trying to get started and you don't really know where to step, and you're wobbling around, the market's up and down, and you're jumping from system to system. This will get you on a path to success. So it will help you find that solid footing by giving you some quantifiable things that you can do. And that's what we're going to talk about in a minute. I'm going to share the exact plan that could have given you an 87-point winner on the NASDAQ, 16 quick points on the S&P, 160 ticks on crude. And these trades are not an anomaly. It's possible with a proven system. Now, I know these are all futures trades I've just shown. I kind of live in that market. I'm a Forex and futures trader, but this method works in any market. It's not some curve-fitted strategy that only works on one instrument. You're going to find that again over and over as you learn about trading. Most successful trade methods are universal. It has to do with just basic math, and we'll get to that in a minute as well. This pattern I'm going to show you works in every market out there. All right. Now, what if I also told you that it also works without staring at your charts all day long? How does that sound? I mean, no one wants to stare at charts all day. Oh, maybe you do. I don't know. I've got better things to do, so I try to limit my time. I used to just sit there and stare at charts, and I found that limiting my time and trading less equaled a lot more opportunity. And this stuff is super important to finding that edge, because ultimately for your future, what it means is that you can finally find success. I mean, ultimately, and unfortunately, 98% of traders fail. And I know you've heard that before. It's a fact. It's unfortunate, and I really do think it's avoidable. It's driven by traders failing to make one or two small adjustments that could totally change their future. Again, it's a common theme that you'll hear over and over and over. Small adjustments. Just make small adjustments, and but you've got to be willing to do it. You've got to be willing to focus on a plan, make that small adjustment if you're going to change that future. And unfortunately, right now with this recent pandemic, what's the right word? The number of new online traders has increased exponentially, and a lot of traders are just getting their ideas from TikTok and Twitter and other social media outlets. It's very often the blind leading the blind. So, again, thank goodness for events like this that Hubert and Jeanette put together to give a chance to learn from actual folks that have been in this market for a while. And here's the thing, you're going to see and you're going to learn over and over, educated traders have an advantage, but it's not the advantage that you think. It's not because educated traders know more about the intricacies of the market or that they have some sort of insider information. It's that they think differently from most retail traders. And I'm going to spare you my soapbox. This is where I can go off on one of those tangents. I'm not going to get into the importance of mindset right now, but I will say that it is the difference between long-term success and the traders that just flame out, trader their accounts in a couple of months. Mindset is key. It's paramount what we're doing here. Thinking differently about the market is what allows successful traders to put the odds in their favor in this zero-sum game. I mean, that's what it is. It's zero-sum game. The losers pay and the winners play. That's what it's all about. The losers pay for the winner's lifestyle. So you've got to find an edge and use it consistently if you're going to be in this game for a while. Now, you don't have to have a lot of experience. I've learned this over my last 12 years in doing this. New traders can be successful, and they can do that by standing on the shoulders of giants, which, quick sidebar, I always associated that quote with Tony Robbins, and I actually found out this morning, that is a quote from, who was it? Man, it's going to drive me crazy. That was a quote, Newton. It was Newton. Sir Isaac Newton said that. He said, "If I've seen further, it's by standing on the shoulders of giants." So there you go. So I learned something this morning, and it just happened to pop up in my inbox this morning. Anyway, I've also learned that simple strategies work. And a common theme you hear over and over, keep it simple. The thing is, you've got to be willing to work that simple strategy. So again, just making small tweaks is what makes traders successful. And sometimes it's just simply simplifying your life. I've also learned the markets are fairly random. We want to think of this as a kind of a predictable thing, but emotions aren't predictable, and there's a lot of emotion in the market. There's a lot of things that come out of left field, and it creates a randomness in the marketplace. But through that randomness, an edge can be found, and if you exploit that edge with good money management, that's what equates to trading success, right? I've also learned, and we mentioned this earlier, psychology of trading turns any good system into a bad system. You can have people running robotic systems that work great over time, and you'll have some that do well with it and some that don't. It's because the ones that don't bail out at that maximum pain point for them, which is different for every person out there, and don't stick with it. Psychology of trading kills any good system. At the end of the day, it's all easier said than done, and that's why you need to find a mentor or a coach, someone to help guide you along, help you learn, right? So how do we do this though? Let's dig in and talk about how we can actually develop a plan that helps us find that edge that we can use consistently. So how do we do it? Well, we can start here. We can start by getting rid of the need for information overload. And that's huge. Traders come into the market looking at it in very different ways. Some look at pattern recognition. Some use multiple indicators. Others rely heavily on fundamental analysis, right? Nothing wrong with any of those trading plans, by the way. I mentioned that early on. There are folks that apply them extremely effectively, and that's awesome for them. For me, not so much. I've learned about them. I've tried them all. The only one that really proved to provide me with consistency and help me get that footing is the one that I'm going to share with you today, and then you can use that to grow, right? Here's the thing. Looking at patterns, it seemed great for me early on, but only in hindsight. When I'm watching that hard right edge, the hard right edge of the chart where the future's unknown, I found it tough to interpret. I found it very subjective because the patterns only presented themselves after the pattern was formed. Maybe I didn't learn it right. I don't know. For me, didn't fit. Fundamental analysis. That one just makes me pull my hair out. It puts that Keynes quote into perspective. The markets can be irrational for longer than you can be solvent, right? It drives me nuts to clearly see that an instrument should be doing something, but it isn't, right? It's not doing it. So again, I found that very subjective. It clearly was not a fit for me. It was creating more stress than anything else, right? Technical analysis is what really spoke to me. Even that, though, it can be confusing when too many filters are added to a chart. And that's what led me to a need to simplify, right? Simplify. And that was kind of my aha moment. It happened, after I stepped back and I started looking at things, and I realized, once you click the button, and again, previous speakers have alluded to this, once you click the button, everyone's odds are the same. You click that button, you enter that trade. Once you've done all your analysis, you've made your decision, you click the button, you have no control. It's 50-50 at that point. It's either going to go up or it's going to go down. All of your analysis in the world does not change a dang thing. So stop for a minute. Just let that sink in. Once you accept that, once you really accept that truth, and you'll hear kind of a common thing with traders is we all get kind of Zen-like and wanting to look internally. But once you accept that as a truth, you'll feel this calm kind of wash over you. So stop complicating your life and just simplify, right? We have this tendency as humans to want to make things so complicated, and they don't need to be. I don't know why we do that. Just break the method down to a few root steps that give you a slight edge, and then exploit that edge over and over and over. That's all we have to do. Pretty basic, right? And that's where the BTX method comes in. So that's what we call this, the BTX method. And it's a discretionary trading method, but it's rules-based. So it takes the guesswork out of trading, and it reduces that subjectivity of finding the right direction and finding the right entry point, right? It tells you definitively, here's what we need to be doing. So think about it. What if you could reduce that time staring and analyzing charts? Just get some of your life back. What if you time your entries better to maximize the returns and limit the risk? Increase your trading accuracy. That's always nice, right? What if we can remove that subjectivity from the markets and actually trade based on quantifiable information? Think that would make things easier? Yeah. Type a Y, type a yes, type something in. Cool. Awesome. Well, you can do those things when you follow 3 simple steps. We're going to identify the trend. We're going to wait for a pullback, and then we're going to enter on the break of a key area. Now, I know you're looking at this slide and you're going, dude, Brian, come on. What is this? Those are super broad steps. Yeah, they are. They are. We're going to break it down in a minute. We're going to break down each of those steps and give you some quantifiable stuff that you can take away and start using. Now, I'm a big fan of following the trend. So the first step is identify the trend. Why do I care about what the trend is? Well, I care because an object in motion tends to stay in motion until acted on by another force. Yeah, I mean, I just quoted Newton's law in a trading presentation. We're going to talk more about that in a minute, though. because it's absolutely true. You think about the motion of the market. You know, it's a force to be reckoned with, right? But even within that, there are ebbs and flows. So once we identify what the direction is of the market, we wait for a pullback so we can enter on a bit of a discount. And then we execute our trade when price breaks through a specified level. Now, I know it's super simple and you're going, okay, well, Brian, come on, man, what's the catch? I know there's more to it. And yeah, there is more to it. So let's dive into it. I just want you to keep in mind, I put this slide up and made it very simple because simple is great. This is the root, right? Don't overcomplicate something that doesn't need a complicated solution. Simple plans work because they're simple, and because they're simple, we have a better chance of understanding them and thereby sticking to it and executing it right? And we're going to get more into that. And I talk about that a lot, actually. I do daily live updates, and we talk a lot about that. And there's even a trick that we can implement that helps us put that trend momentum even more into our favor. But let's go ahead and dig in, right? Let's get to the nitty gritty. So step one, we're identifying the trend because, like I said, an object in motion tends to stay in motion until acted on by an outside force. I mentioned that earlier. I think of the market like a freight train, right? It's moving. That train is going. And we just want to hop on and we want to go for a ride on the train, right? We don't want to jump in front of the train and hope it stops, because I think you guys all know these big, massive objects, they don't change direction very quickly. Now, don't get me wrong, there is merit in counter trend trades, and there's a whole plan and strategy around that, but that's a discussion for an entirely other day. Because right now, all I want to focus on is trading with the trend. That's what's going to get you on the path to success, finding a trend, trading with that trend. Once you get consistent, you can do that consistently and successfully, then you can start adding in tweaks, right? But the step one, stop looking for the holy grail and just get something that's going to get you some results, right? Trend trading has been proven to be very successful and easy to follow. The challenge is, how do we actually do it? How do we find the trends? So to find the trends, and if you look up trend trading, by the way, you're going to find a ton of different ways to identify the bias. And again, I mean, there's no right or wrong. There's no right or wrong to that. There's just different approaches to doing it. And the way I do it is this. I keep it simple. I apply moving averages to my chart. I start off with some moving average. One is a short term or a fast moving average. The other is a longer term, or what we could call a slow moving average, right? So for the short term moving average, I set it to 20 periods. For the long term, I set it to 100. If the 20 is above the 100, so if the red's above, or if the green's above the red, I consider the bias to be long. If the 20 is below the 100, then the bias is short. And then I look at that on multiple time frames and I see if they're in agreement. So super basic, super simple, right? Moving averages, multiple time frames. So I like to trade on a 30-minute chart. That's kind of where I, quote, live. So I check the bias on a 4-hour chart, and then I confirm the bias on a 30-minute chart. Now, I only want to trade when the bias is the same on both time frames, right? So if my bias is long on the 4-hour, it needs to be long on the 30 in order to go long. If they're mixed, then I don't trade. That's a mixed condition. Why take the additional risk? We don't have a confirmed bias at that point. And by the way, it's just as important to know when not to trade as it is when to trade, right? You all heard the Kenny Rogers song, you got to know when to hold them. I'm not going to sing it for you, even if you ask. It's Halloween, but I don't want to scare you too bad. So, if the directional biases are different, don't do anything. Go enjoy your day. Go have fun, right? But once we've determined the directional bias, if they're the same, we've got a confirmed bias, then we can move on to step 2, right? Step 2, wait for the pullback. This is where we start looking for an entry. Now, in a lot of trend following systems, you'll trade straight from breakout points, right? You're just going to look at straight breakout points. And often those breakout points are recent tops or recent bottoms, just depending on what direction you're going. But I like to get things at a bit of a discount, right? I want to go to TJ Maxx and get that $100 shirt for 15, right? I don't know. But, we get a better price so that we can give ourselves more potential upside. Yeah, the markets don't just go in one direction. Even when there's a solid uptrend, there's going to be times when the market moves down, and when there's a downtrend, there's going to be times when the market goes long within that downtrend. So to get the best entry, we just want to wait for the market to make a pullback from its intraday trend, and we identify that by looking at this and saying, well, okay, if the market bias is long, we want to wait for the market to start making lower highs and lower lows, like in this box right here. It's on my screen. We've got the market going long, and then during regular trading hours, we start watching to see if we're making lower highs and lower lows, and that gives us a chance to look for that entry. And we would enter on a break. So we've made lower highs and lower lows. So this one, lower high and a lower low. Oops. Well, I guess it'll pop up in the next one here. Anyway, made a lower high and a lower low, and that allows us to enter on that break right there. And we're going to get into that in a second. I've got some clear results that mark these for you. So we'll get into that. I mean, it takes literally 2 minutes. And the beauty behind that, since I'm looking at 30-minute candles, we don't have to wait for the candle to paint. We're just checking when it's done. So it takes a minute at the top of the hour and a bottom of the hour. I mean, super, super quick, right? And I think it took less than 5 minutes to run through this example process right here. It's an easy strategy. It's super easy, but it's crazy powerful. And we're going to get into that in these examples here right now. Now, when I start showing you these examples, you're going to see little green and little red arrows. If you're seeing little green, little red men, that's a whole different thing. You're going to see arrows. And those are our potential entry points. And that's also the BTX indicator that we're going to talk about here in just a bit, right? It takes that process that I walked you through, and it does it automatically. But everything that we're doing can be done with your own default processes. But you apply that indicator, and now what you were having to do that might take a couple of minutes knocks it down to less than a minute. So this is just the S&P from this week so far. We're going to dig into these here in just a little bit more. But we can see early in the week, and this was taken on Thursday before maybe even Wednesday when I was putting these slides together to get everything ready for everyone. But we had some long opportunities earlier in the week, and we know that because the biases were, the green was over the red, the blue was over the orange. So my long-term bias was long, my short-term bias was long. And so we were in a long trend looking for long trading opportunities, and we could see that it was telling us, hey, check this out. There might be some long opportunities there. And, there were. We could enter on a break, ride it up for a little bit. Later in the week, when the trend changed, we can see that there were short opportunities, and it's telling us, hey, check it out. There might be some short opportunities here. What's up? And then we can ride that wave down as well. And the bottom line here is we're just trying to trade in the direction of that confirmed bias, find the entry point that's going to give us that best place of entry to limit our risk and give us that opportunity for maximum results here. That's what it's all about. That is what it is all about. So let's start with some examples. Let's start with the S&P, and we're going to dig into this so that you guys can really see those 3 simple steps in action, right? So trading one contract on the ES, potential $1,000 upside on 275 of risk, right? So what do we look for? First thing we're going to do is we're going to identify the directional bias. We're looking for the fast moving average to be above that slow moving average, right? So that's, and we're also looking at that on a 4-hour basis. I just don't have it on here because I didn't have enough room to make this big enough to see everything at once. But we're looking for long trades, right? We're going to look for long trading opportunities. And we know this because the green is over the red. My fast moving average is above my slow moving average, right? No second guessing, not reading anything into it about, oh, the green moving average has changed with a direction of 30% down towards the red moving average, and therefore, I don't care. It's the green over the red. Quick and dirty. That's all we need to worry about. Then, during regular trading hours, we're going to wait and see if the market starts pulling back. If we start getting lower highs and lower lows, are we starting to pull back a little bit? And this is key. We want to see a lower high and a lower low. Lower high and a lower low. Like this bar, it's a lower high, but it's not a lower low. Kind of stalled out there. We need to see this. We're actually pulling back pretty deep, right? At that point, we can identify a spot to enter. So we'd say, hey, we want to break. If this thing comes back and it breaks to the top of that previously closed candle after this pullback, that's going to give us a chance to enter. So we'd enter on the break of that previously closed lower high. And we can see that here. Our indicator, we're seeing, hey, we've got the little green arrow. It's saying, hey, dude, you heads up. We made a lower high and a lower low. If price breaks above that candle, trade it. It didn't. Next candle didn't do anything. It invalidated the signal. So I'd leave, go back. A little bit later, it says, hey, dude, heads up. We got potential long opportunities here. If it breaks above the close of that candle, trade it. Well, we can see it broke. It broke on the breakout of that previously closed candle. Boom, runs up to profit. Super easy. Just wait for the pullback and then get in at the close of that previously closed lower high, right? This is an example using gold. One mini contract, potential 1750 in profit on a little over 500 to risk. I'll take that reward to risk anytime. Same exact process for the entry. We're looking at what's happening with the indicator first. Do we have a moving average that's telling us where our fast is above the slow, or is it vice versa? In this case, fast moving average is above the slow. So my green is above my red, and it says, all right, we got a long trend. We're going to look for long trading opportunities. And by the way, again, it's confirmed on the 4 hour as well. It's just the 4 hour is going to be down below this, and we're not going to see everything on this blow up here. So it's kind of compressed to be able to really see what's happening with the candles here. But same thing, during regular trading hours, we're going to wait for price to start pulling back a little bit. So here we have a lower high and a lower low, and then we're going to trade on the break of that previously closed lower high, or previously closed lower high right here. So enters on the break, and we can ride that on to profit. Again, super easy. We're trading in the direction of the trend. We have a quantifiable way to identify the direction, right? We have a quantifiable way to identify the bias, and then we're just giving ourselves to get in at the best price as price starts pulling back, right? Now, generally, and I've already seen a couple of questions here coming into chat, question pops up, all right, that's great. You've shown us futures. You showed us futures in the beginning. All these are futures trades. What about stocks, Forex, ETFs? Does it work there? And yeah, I mean, the sign of a good trading plan is that, and I mentioned this earlier, it should work universally. I mean, there should be some small adjustments. There should be some small adjustments depending on what you're trading. There might be different times of day that you trade it because it's more active. The instrument might be more active at certain times of the day than others. And volatility probably plays into that a little bit around how you're going to manage your stops. But small adjustments. Remember, we want to keep it simple. We're not trying to build some complex model that we're curve fitting to a specific instrument. We're using market trend, breakout momentum, and basic math. Winning more than we lose, and we stack those together to create an edge. It doesn't have to be any more complicated than that. So, here's Amazon, 30 points of risk, 61-point return, same exact process. Fast moving average is above the slow. The slow, actually, when I cut my screenshot, is so far down there, it was off the screen. But we wait. Price pulls back in the trading session. We look for lower highs and lower lows, and then trade the breakout as it breakout as it crosses above that lower high. And again, the BTX indicator is going to alert us. We don't have to worry about second guessing and analyzing the lines. We just come in top of the hour, bottom of the hour. If you're trading a 30-minute chart, right? Top of the hour. Hey, what happened when that candle closed? Did we have a little green guy or little red guy telling us that we've got some activity that meets our plan? If we do, then we can just set and take action. If we don't, we move on. Super easy. Nothing to it. Now here's one on SPY, right? This is an ETF, 375% return on risk. Exact same process. I think you guys are noticing a trend now. It's the exact same process. There's not a lot to it. Look for the fast moving average to be above the slow moving average. Identify a pullback. So we want to see price pulling back, making lower highs and lower lows, and then we trade on the break of that previously closed lower high, right? That's all there is to it. backed indexes. This is the NQ, is NASDAQ, right? Single contract here, potential risk of just over $500, reward of $2,600, exact same process, right? Again, identify the bias. What directional bias is there? Is the green above the red? And don't read any more into it. We don't care about, well, the green is converging on the red. It's, blah, blah, blah. Is the green over the red? Keep it simple. Don't overcomplicate it. Folks will take this super easy process and they'll make it so much more complicated than it needs to be, right? Wait for price to pull back during regular trading hours and then trade on the break of that previously closed lower high. So you can see the entry is the top of here, right? So price pierces it and it takes us on. Ride that on for an example, or ride that on for a profit, right? Now, real quickly, you've probably noticed I've got trailing stops. I use trailing stops on all these. I don't know if you noticed that or not, but these little plus signs are places that I can trail my stop up. There's pros and cons to trailing your stop. We can talk about that, more in depth. I talk about it a lot in the live sessions. Everything we do in trading is a well, quote, trade-off, right? It's a trade. Everything we do in trading is a trade. Trailing stops have benefits, but there's drawbacks to them. Fixed stop loss points have benefits of using a fixed stop loss and a fixed reward that's 2x, 3x, 4x of your initial reward. That plays out mathematically, but there's pros and cons to it. For me, psychologically, I like to take my risk off the table pretty quickly. And you don't want to be too quick about it because that's a drawback on itself, but I want to take risk off the table pretty quickly. Ultimately, there's really no right or wrong when it comes down to using how to do your stops. It just really comes down to two things. One, are you comfortable with it? Does it fit your risk tolerance? And two, does it make sense mathematically, right? You're not going to know, number two, does it make sense mathematically? You're not going to know that until you do some testing. And that's, as I mentioned up front, why it's so important to do your due diligence in whatever it is that you're trading and how you're trading it, what you're trading, and the instruments that you're trading on, and figure out, what's going to happen with some reasonable sample size. Not the last 5 trades. Even the best trading plan in the world, in which there isn't probably any such thing, is going to have series of losses, just like it's going to have series of wins. So we don't just look at the last 5 trades. You've got to go back and really look at that over a large breadth of data in order to really be able to understand what the pros and cons are to how you manage your stop and how you manage that trading plan. But anyway, I'm going to go down a rabbit hole on that. So let me get back to this. Obviously, I've shown you a lot of examples about where everything works wonderfully, and it does. It is. It's a wonderful trading plan. I love it, and it's a great way to get your footing when you're looking to get some consistency and have something that you can execute, the same way every day, every time, without hesitation, without extra thought, right? But it doesn't always work. And again, as I've mentioned a number of times, no system always works. There is no such thing. Stop looking for it. Just stop. Stop right now. Don't do it. Don't search anything else. There's no way to get 100% win rate. It won't happen. The key is to have your wins outweigh your losses, right? That's what it's all about. I mean, sometimes you get situations like this. I mean, over here it was a great entry and a win, but other times you have this nice upward trend, price is moving up. You get the entry, says, hey, dude, this is great. Check it out. Enter, and you enter at the top as it breaks back in the direction of its current trend. And then, boom, it something just suddenly reverses it, and that could be a boulder hitting the train. Who knows? I don't trade into news, so I never trade right in the advance of a planned news event or anything of that nature. There's emotion in trading. There's, especially right now, there's a lot of emotion in the marketplace, and there's a lot of things that can just kind of come out of left field that we can't anticipate, which again is why trading, while it is somewhat predictable, is also fairly random. So, we've got to stack the odds in our favor and always trade the stop losses to control our risk. That's what it's all about, just by using the basics, right? It gives you an edge, which hopefully you guys are seeing. Just by using these basics, you see how you get that edge over and over and over, right? So another quick example on crude here. This is I just wanted to throw in a short example because all the examples up to this point had been long examples. Same process though, just on a short bias. We've got a short bias where the red's over the green, and we just look for in this case, higher highs and higher lows. So instead of pulling down, we're pulling back up, and then enter on the break of that previously closed candle as it moves down, right? So how do we get a bigger edge? How do we make that even easier, or expand our edge just a little bit? Well, we can do that by a couple different ways. We can start looking at other time frames. Some traders like to drill down to a 5. That's pretty darn fast, but you can identify what's happening on the 4 and the 30, and then go down to the 5 and even control your risk even a little bit more by looking at that on a smaller time frame. But yeah, that's something we can talk about in classes. We've got to consider our maximum risk and size our trades appropriately. That's a big thing we talk about in our live classes. Is trade sizing, because stop loss placement, trade sizing, that plays into it a lot. That really comes into it, which comes back to where we place our stops and how we use our stops, and that old argument around fixed stops or dynamic stops. Using a fixed stop of like a 5-point stop on maybe an 8-point on the S&P might be fine, but using that same stop level on the NASDAQ is foolish. It'll blow you out in a second, right? And then there's the trading mindset, right? We've got to focus on the mindset. Get that, as a friend of mine said, to get the bozo out of the way. You got to get that clown. Stop clowning yourself. Stop being a fool with your money, and get out of the way. So, what I've outlined for you today, if you just took those 4 futures trades that we mentioned earlier, maximum risk of about $1,800, reward potential of 7,000. That's a 350% return. Just looking for one potential trade a day in a 2-hour window when things are most active, and we'll get more to that, at the end if we have some time for questions. But I really want to just have you step back and just really think about this. Would you risk $2,000 to potentially make 11.5? Would you risk 45 to make 490? Would you risk 900 for a potential of 9,000? And those are actual numbers. Those are potential numbers that are possible with this type of a trading strategy. I know you would. I mean, it'd be foolish not to, right? So similar to what Troy asked you guys about earlier, I just want to know, have you found what we've talked about today helpful? I think I've laid it out for you. I've given you a simple steps. I've shown you exactly the process over and over and over. You can go right now, use the weekend to start analyzing charts and seeing what I'm talking about, finding that pattern there. So did you find that helpful? Do you think it was well spent? Do you think that you can use maybe some of what we've learned today to start applying next week and start growing that portfolio? And then ask yourself if you'd like to get better results even faster, because this comes back to the standing on the shoulders of giants, having a mentor, having someone that can help you along with that so you can dig deeper and get those results even faster, right? So we mentioned the BTX indicator earlier, and it's part of our breakout trader system, where I actually walk you through soup to nuts, going into even more detail than we have over the course of this short time that we've had together. You'll see some clear examples, and it's available for you right now when you become part of the Breakout Trader program. And it's really amazing. It's a great way for you at a low cost to learn the trading process that we've covered today in depth, and really start digging into ways that you can start customizing that process and making it specific to you. Because that's the other piece about a good trading program. You want to be able to customize it and kind of own it, right? You need to make some tweaks that are specific to you and your trading style. In the course, we really go into depth about how to use the strategy and how to use it on different account sizes, which is a big deal. We dig into how to further dial in that entry process. We talk about using other filters that you might be able to add down the road for finding high probability breakouts. And then we get into some mindset. We have to have the right mindset to stay committed to the method and the trades. Not only committed to the trading method, but committed to our trades once we're in them, so we can get those 2x, 3x, and beyond results, right? We also want you to learn how you can be wrong more than you're right and still make money. That's one that some traders just never really get over, because I see the questions come up all the time in events like this. What's your win rate? What's your win rate? It doesn't matter what the win rate is. Win rate's a arbitrary number. It only, it matters, are you winning more than you're losing? And I mean, you could have a 30% win rate and still be profitable. But that, again, that's a tangent for a whole other whole other discussion. But today with TradeThirsty, we normally charge almost $700 for this, and for TradeThirsty, we've knocked it down $297. That's a one-time fee of $297. No hidden charges, no monthly charges. You get lifetime access to the BTX indicator, which gives you those alerts. He showed you those red and the green arrows. They pop up when the condition is there. Only when the condition is there, and over the time. Hey, there's a condition, dude. Check it out, right? It pops up, tells us what to do, gives those potential entries, those potential targets, the potential stops, right? You also get access to monthly members training sessions that are live. We dig in, we answer your questions live, we investigate the current market conditions, we talk about tweaks and things that you can do, right, to help you along and help you grow, help you learn, because that's what it's all about. We want you to learn and grow. So $297 when you get started today. Just go to tradewithsmarts.com/breakout, right? That's it. Super easy. And we've talked about the training process. I didn't go into a ton of detail about the indicator, but you did see it utilized on every one of those charts and examples that we talked about earlier. It automatically identifies the market bias. It finds that sweet spot for your next entry, and it provides you with stop loss and exit ideas. I mean, it's right there for you. It only pops up when the conditions are right. It's not an indicator that's out there, blinking at you all the time. It comes on when the condition is right. Then you can make the decision of what to do at that point, right? And you get lifetime access to this. Now, it's a TradingView indicator. I have it on TradingView. Why TradingView? It does work with the free version, by the way, of TradingView. You don't have to have the paid advanced versions or anything. But I use TradingView for a couple of reasons. One, the biggest reason, I'm a Mac guy. So, my whole house, with the exception of this one box that's my trading box, is Mac. So my frustration with trading platforms is that they only work on PCs. So if you've got multiple devices, you have to set it up new every single time. The stuff doesn't carry over. It's just a pain in the butt. With TradingView, it's online and it's seamless. So if I set it up on my PC and I log into my Mac, I've got everything on my Mac. So if I'm traveling, I grab my MacBook Pro, we go out, I've got my charts set up, don't have to make any changes. If I log in if I grab my son's tablet, it's there on the tablet. If I have to log in from the library because something stopped working or everything failed, it's there at the library. And it connects right to TradeStation. So it's all seamless. I love it. But I mean, I'm not doing an ad for TradingView right now. I probably sound like an ad for TradingView. I just love it. That's why I use it. So again, just a quick minute. I know I'm trying to make up some time here and get Stephen in close to his allotted time slot. But just real quickly, I'm just breaking it down a little bit more. There's 3 sessions. They're already out there for you. They're recorded. They're quote, in the can. They're ready to go. So you get the 3 sessions that really walk through how to utilize this system. You learn the process. You learn how it works. And you learn why it works. That's a big deal. Why does it work? That helps you with the mindset. I'm also doing, for those that sign up today with TradeThirsty, I'm doing a live session on November 5th. So in addition to the 3 courses that are already there for you, you'll also get that live getting started course where we can dig into all this information and start answering your questions straight away as well. Right? And I love to talk about finding the right market for you to trade, because that's something that folks don't always consider. They don't consider alternatives, right? Some people just go, well, I want to trade futures. They don't know why. Why do you want to trade futures? Why? Give me an answer right now. Why do you want to trade futures? I don't know. My buddy does. He said it was good. The reality is you've got to trade the market that best suits you, best suits your account, best suits your lifestyle. If you're live trading in something, and you work, let's say you have a shift that starts at 6 a.m. and ends at 3, how are you going to live trade the market? You're not there in front of it. So maybe there's another market that better suits you and your account size and everything else. Let's think through that. Let's help you find what that is. That way we can put the odds of success back in your favor, and then you can grow from there, right? So anyway, that link down at the bottom here, I think it's in chat. Yeah, it's in chat as well. tradewithsmarts.com/breakout. That's what it's all about. Only $297 today, which is a special offer. Once this is over, it goes back to $700. It goes back, $697 is the regular price. So one-time fee, you own the indicator for life, and you get those monthly meetings. So I think that's a great stopping point for me. Let's see if we've got time for a couple of questions here, which I think I do. Jeanette, do I have a little bit of time? I know we started late. I reeled back in some of it. Do I have some time to take questions?
Go ahead. I
All
talked
right.
to Steven, and he's down to wait for a minute.
Okay, cool. Very good. Let's see what we've got here. So does this work on all time frames? Yeah. I mean, we briefly went over it, but yeah, it works on all time frames. As with anything, there's going to need to be a little bit of tweak here and there. I mean, the overall process is exactly the same, but we might have to look at what it is that we're trading, the volatility of that instrument, and make some slight tweaks. It is kind of meant to be utilized intraday. So going out to dailies, it does eliminate a lot of the noise that's there on the lower time frames, but yeah, it can be adjusted every time frame. Let's see, a lot of questions about it being recorded. So if you guys missed part of it, yes, it is recorded, by the way. I see a couple of questions in here about the moving average types. Yeah, so these are exponential moving averages as opposed to simple. The exponential, what that does, I don't know if you guys know the difference between a regular moving, just a moving average, a simple moving average, and an exponential, but the exponential gives a little bit more weight to the current price. So you could use SMA on it as opposed to EMA. It doesn't really matter. I mean, at the large scale, it's more about just simply identifying the trend. Again, don't overthink it. It's just about being consistent, right? It's all about being consistent. Question, this one's coming in, is asking about the order form, trade with smarts breakout. Yeah, it's up, guys. It's up. It's working. Okay, yeah, good. Okay, some questions, a couple, I'm just trying to scan. I don't want to go way over. There's a couple of questions about trading in Forex. Yeah, okay, so Forex. So, right, because there's not necessarily a quote opening session like we have with futures. So Forex is a little bit different, but there are still times when currency pairings are more active. And I don't want this to turn into a long Forex training, but keep this in mind when you're looking at Forex currency pairs, they're going to be most active during the times that they're actively trading, right? So let's think about it. Would a Aussie yen be more active during the Asian session, or would it be more active during the end of the U.S. session, or at the middle of the U.S. session, right? Take that to the bank. Think about that. You trade what is active. You trade it during the time that it's active. So like a pound yen, for example, is going to be more active during the beginning of the London session than it would be during the US session, because it's more active. Both of those markets are open and they're being actively traded. So again, works in Forex. You've just got to adjust when is the time that it's going to be looking for the trading opportunities to be the most active time for that specific instrument that you're trading, right? Does it work on Thinkorswim? No, it only works on TradingView. But again, Troy mentioned this in his presentation as well. Don't get caught up on what platform the indicator works on. I mean, it takes a second to load a platform, and all you're doing with an indicator is you're looking to see, is it telling me to do something? It's literally seconds. It's seconds. And then if you need to place that trade on a different platform, is that alt tab really going to make or break you? Because you're not trying to get in at this instant moment. You're looking to set a trade at the top or the bottom of that previously closed candle. you know, it's not going to move there within the next 2 seconds. So I might, but you know, the likelihood of that's pretty low because we're looking at 30-minute candles, right? Let's see, trying to go on. Oh, somebody's. That's because you ignored the hangy man. I didn't ignore anything. I don't know. I don't know what that was a reference to. There was a comment about ignoring something on the chart. I enter where the indicator says to enter, right? You saw the red and the green. That's the beauty of BTX is, you know, it's showing us. Let's see, let me flip. Where is that? It's showing us what to do, when to do it. It's telling us, hey, you've got a tradable opportunity here. You know, maybe you need to take a trade, and you know, if it breaks through there on the next candle, take it, and if it doesn't, don't do anything. You know, I'm not. There's no cherry picking. It tells you what to do. It does not work every time, and I mean, I think I was more than honest about that. It does not work every time, and no trading method does. It's all about finding something that gives you a slight edge and being able to be consistent with applying that so that you get those results over time. Trading is not about the last 5 trades. Trading is about that bulk of trades that you're taking over your trading career, your year. You know, that's what it's all about. That's where you get your results, is over the long term. You know, traders get so caught up often. I don't get on a soapbox, but you know, get so caught up with just looking at the last couple of trades, and when you enter a series of losses, they, you know, hit, or I don't know what series that might be, but it hits a pain point, they jump ship, they go to the next one, it works for a minute, hits a series of losses, they jump ship, they go to the next one, and it's this endlessly repeating cycle, this endless cycle of failure because they're not sticking to any one thing long enough to let it work. Do yourself a favor, jump in here. Super simple strategy, tradewithsmarts.com/breakout, get your footing, find a strategy that gets you to success, that works, and then build from there.